Hello traders, the title of the video is how to become a better complex Elliott wave a trader. Step 1. Alright, we are on the monthly chart of Apache Corporation, an American stock that belongs to the energy sector, oil and gas sector. And we want to discuss how to become a better complex Elliott wave a trader, and this is a step 1. All right. So one of the challenges that we face as Elliott wave students is that we'll know that very often they show us that the Elliott wave, the multi-wave, is formed of 5 waves. All right. 1, 2, 3, 4, 5, followed by a correction in the shape of a zigzag. All right. So you may see it on the internet, different drawing, different charts. And you will notice that usually we see something like this very often. All right. A typical correction, 1, 2, 3. So you see it clearly: first wave, second wave, third wave, fourth wave, fifth wave, and then 1, 2, 3. All right. But then sometimes the wave count become too complex. So even some experienced traders may find it quite challenging to label, okay, whether this is a W, okay, XY chart pattern, is it a 333, and so on. Talking about the combination, when you see a different corrective wave coming together. So how can you become a better complex Elliott wave trader? Well, personally, the way my mind functions, which I told traders before, is that whenever I see anything that becomes too complex, I try to simplify it. And I recorded a video last time. I hope you like it. And the title of that video was how to handle an Elliott wave count that becomes too complex. I posted that video at 24 Elliott wave YouTube channel. But before that, I also recorded another video that I titled how to play the mind game of Elliott wave trading. Now when it comes to a complex Elliott wave, one thing that one can do to become a better complex Elliott wave trader is to start drawing the waves as you see it, like a little chart. So like here, you see on this chart now, everybody will agree that this was a trending first. Will you agree? If you disagree, let me know in the comment section so I know that you need more help. All right? All right, so everybody will agree to that, okay? It's a trending first. It's a beautiful trend. All right? So when we look at the trending first without blinking, one of the three that we can do, which one is the longest portion of this trending first? Is this one. So we will say, if we want to count, we will say probably this is the third Elliott wave. But I don't want to start counting the wave during the trending phase. We want to talk about complex wave. So we say, okay, now it becomes clear that the trending phase has ended here. Somewhere in 2008, that trending phase has come to an end. Why? Because of the financial crisis. As an Elliott wave trader, you want to know what is happening in the market. Financial crisis 2008, 2007, 2008, bullish market 2009, and so on. Commodity boom 2003, and so on and so on. All right. So bullish phase has ended here. So now a correction is underway. Look at this correction. Which correction is this one? So in order to become a better complex Elliott wave trader, like you see, probably you are watching this for the first time. Maybe you were not here. So you will just go like this. Price went down like a little chart. I talked about this before. And it's so important. And by doing this, you will see some pattern that will become very apparent. Will become clear that this is looking like one specific pattern. But in order to see the pattern, you need to start drawing lines. Just say, drop it down like this. Just put them on the chart first, and then step back. How many feet? 3 feet. Should we say that? 3 feet. And try to see what's happening here. Okay, just say that. What's happening here? Try to look at the chart for a while. Don't just stare on it. Try to figure out, okay, to analyze the structure that you have drawn on the chart as I'm doing now. You see, I'm just doing it now like a little child, isn't it? Can you do this? Everybody can do this, okay? Let's go like this. So again, 1, 2, 3 down. Okay, I don't want you to get confused, so I'm going to do something that you may say, Joe, what are you doing now? 1, 2, 3 again here. Why am I focusing on the 1, 2, 3? Because when we are talking about corrective waves, the first thing that is coming to our mind is free. Yes or no? So that's why you can see that I skip these 2 sessions here. And I have a reason for it. I leave it now like this, like a double bottom here. 1, 2, 3 again, bounce up. So this is what we have seen, okay? So you just put it like that. If you like, we can put it this one and this one down. But I don't want to do it, okay? So now you step back a bit and see, what's this? It's quite a messy chart structure. It's quite complex. But then you take it a piece, one piece at a time, all right? So we can say, looking at this section here, we start with this one. It looks to me like a sharp correction, but we can investigate more whether it's truly sharp correction, whether this has been subdivided into 3 also. But because on the monthly chart, we investigate, which means checking the internal wave of this move down. I can go to the weekly chart. You see here, now on the weekly chart, it becomes clear that this move down is 1, 2, 3. With a bit of mess here, another one. So you will say 1, 2, 3, 4, 5. Okay. All right. You see now? 1, 2, 3, 4, 5. Okay. All right. But I don't want to call it 1, 2, 3, 4, 5 because I know other things. You can notice again here, whenever you see a chart form a double bottom chart pattern, be careful. Okay. That's why here. See here, I have a double bottom chart pattern. That's why I'm quite a bit. So the move here in fact is 1, 2, 3, bounce up, bounce back down. So this move 1, 2, these 2 move here 1, 2 are discounted. So the move down in fact is 1, 2, 3. So then it finds support here, bounce up, come back from a double bottom chart pattern, which is a validation. Okay. Feel free to disagree. All right. So maybe because I've been dealing with those things before. That's why I don't want to, okay, call this one 1, 2, 3, 4, 5. Let's go back again to the monthly chart as we are trying to investigate each piece each piece, okay, at a time, okay. Going back to my monthly chart. So we have a bit of idea what is happening here in this session here. Followed by again 1, 2, 3. So you may be thinking, Joe, it looks to me that we have a flat correction, and also we have what we call, all right? No, I will not talk about that now. So it looks to me that a flat correction is developing here. So it looks to me 1, 2, 3, 1, 2, 3. All right. Another trader may say, George, it's not 1, 2, 3 down here. It's 1, 2, 3, 4, 5, 1, 2, 3. So which pattern are you thinking of? So you'll be thinking of a zigzag pattern. 1, 2, 3, 4, 5, 1, 2, 3. So though there is a bit of disagreement about what I'm saying here, talking about the first session, I want to call it 3. Another one may say 5. So we say 1, 2, 3, 4, 5. George, 1, 2, 3. That's a zigzag pattern being formed now. Okay. That's fine. That's fine. Okay. So this one is clear. 1, 2, 3. So here we will say, okay, probably it's a flat correction. Okay, flat correction. Now we go, okay, so flat correction, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5 down. So we'll be expecting 1, 2, 3, 4, 5 down. 1, 2, Now again, this is what I'm talking about. Be aware of the double bottom chart pattern that are appearing when you are counting wave. They fool a lot of traders and they get into trouble sometimes. Here it is. One, personally, all right, this is what I would do. So that's why we prefer trader to put comments, all right? Say, George, you let me down. You let me down badly, George. You let me down. This is not true. All right. Let's go. Okay, something like that. So because I see this, anytime I see double bottom, for me personally, all right, feel free to disagree. Whenever I see double bottom, it's a kind of an equilibrium level. Price went down to this point, bounce up, support zone, pull back to the same zone. It's a double bottom chart pattern. This action here, I tend to put a question mark on it when I'm counting wave. I'm always careful of the double bottom pattern. So in this scenario, I will put this one at this. So all these move 1, 2, 3, 4, 5, because in fact the price just came down here to this support level. So I can cover this session like it did not happen because of the double bottom chart pattern. So now it becomes clear to me that I have 1, 2, 3. I have, so this session that I'm calling 1, 2, 3, the red session, 1, 2, 3, 1, 2. Because of the double bottom chart pattern, I cover this one. And now I see clearly now that I have another session here. 1, 2, 3. We can go again and to investigate this session here, this one here, to see the internal wave one more time on the weekly chart. Is it 1, 2, 3 again? Followed by another 1, 2, 3. And here we have, so we have another 1, 2, 3 in the middle here, followed by another 1, 2, 3. Now, will this help you to become a better complex area wave trader? Right? We like the interaction at 2 for area wave. And if you like it, let us know. If you dislike it, let us know. So from the mess that we have from the beginning, a complex, confusing chart structure, price structure, is making a little bit sense, yes or no? So 1, 2, 3, 1, 2, 3 up, sharp move down, followed by 1, 2, 3, another 1, 2, 3. The reason why I want to focus on the 1, 2, 3 is because those are corrective waves. Here again, we have again with because of the double bottom chart pattern, you can see how here I have again a clean cut 1, 2, 3. What I have noticed with my experience is that the double bottom chart pattern sometimes can make traders, okay, confused. So be aware of the double bottom chart pattern when you are counting your wave. All right? Now it's coming back down again. So looking at this chart, it looks to me is a flat correction that is a bit complex. All right? Now there is a pattern that we call a triple tree. A triple tree is a double zigzag pattern. All right? So have a zigzag pattern 1, 2, 3. All right, followed by X. That X also is subdivided into 1, 2, 3. That's the second tree. Followed by another zigzag pattern 1, 2, 3 down, forming the triple tree. All right. So in order to become a better area wave, a complex area wave trader, the first step is to draw all the waves. Just highlight every wave as I did here on the chart, okay? And be aware of the double bottom chart patterns. because it's a reaction, all right? It's a reaction. You can see in this session here, there was no double bottom. The price just bounced and it didn't come back here, all right? It didn't come back here because there's something you need to understand when you want to become a better area wave, a complex area wave trader, is that we talk about cancellation of wave. All right. Sometimes you see here this move up, price came back to the starting point. Always be aware of that. All right. And then 1, 2, 3 again. And then now, if you pay attention to the double bottom chart pattern, so its price went down like this, 1, 2, 3, 1, 2, 3. All right. Then bounce up, and then form a double bottom chart pattern. So we again at the starting point, so we say, okay, hold on a second, what's going on here? Because a pattern is developing. Contrary to this move, this is 1, 2, 3. A pattern is completed. So to become a better area way, a better complex area way trader, see the pattern that are already completed. So we can say one pattern is completed. So between these two vertical lines, we have one pattern is completed. So you take it piece by piece. So here again, another pattern is completed. Okay? So you break it down. So one pattern is completed, another pattern is completed. Those patterns are clear and neat, isn't it? Yes or no? Here again, a pattern is developing, down, 2, but it stopped here. But at this point in time, people will be saying, all right, George, it looks to me another 1, 2, 3. Okay, another 1, 2, 3. You see, even though if you do it like this, if you put it like this, say, okay, this is another 1, 2, 3. Okay, fine. But I will not. Personally, I will not. I'll just, if I see double bottom, I'll just cover it like this for now. But some traders may say, okay, another pattern is completed. That's not bad because you are still in it. You are following the price. Here again, you see again 1, 2, 3 changing direction. Another segment is completed. Here again, 1, 2, 3 completed. And now again here, you're going to go 1, 2, 3. That's where people get into trouble. You see now how the double bottom is helping here. Because now if you start going 1, 2, 3, you stop here. And you're going to put another thing here, which is wrong. It's not finished yet. The pattern is now finished here. Not here, but here. Therefore, you will put that another section here and this section here, like I did here. I will cover it for myself, okay? So, are you getting it now? Are you getting it now? Let me know in the comment section. So this section here, I will just cover it like it did not happen. All right? Break it down piece by piece. As you identify each pattern, highlight it. One of the three that I want you to pay attention to, though we have the zigzag pattern that is from 1, 2, 3, 4, 5, clearly neat. 1, 2, 3, 1, 2, 3, 4, 5. When you are dealing with a complex area wave, concentrate more on the 3, 1, 2, 3, change direction, highlight them. Even if it's a zigzag pattern, you will quickly notice it that it's 1, 2, 3, 4, 5, followed by 1, 2, 3, and 1, 2, 3, 4, 5. But by highlighting the trees, as you see here, as I did here, it will make more sense. So now we can see that a new pattern is underway at this point in time. More experienced traders, after doing this exercise that I've done so far, hold on please, let's clean up my chart a bit. So traders do not get upset with me and say, George, what a mess. Alright? Alright? Okay. I need to be careful because I'm saying too many times, okay? I know that in a more experienced trader may do because a trend in first is now what do you do? Remember the story of the stock market, I said it before, apply Fibonacci. retracement and highlight the 50% and the 61.8% Fibonacci retracement level. That's the first support zone. All right. If that failed, we need to highlight another zone, which is the 78% and the 88.6% Fibonacci retracement zone. So two support levels. In fact, it's three support levels after the trending phase. The first one is the 50%, 61.8% Fibonacci retracement level, typical for strong bullish financial instrument. Second support zone for normal stock that are bullish in a zone of 78% and the 88.6% Fibonacci retracement zone. And the last one is the cycle point when the price returns to the starting point. So remember those three zones: the cycle point, zone between the 78.6% and the 88.6% Fibonacci retracement zone, and the 50%, 61.8% level. What is happening now for this stock Apache? That's beautiful name, Apache. Corporation, APA. I forgot to tell you that. APA, Alpha, Papa, Alpha. Energy sector. Now, the good news, I like this. The price D below that 50%, 61.8% level, and it's trying to go back inside, but they are pushing it down. So now we have another move down, and we just take it one step at a time. How? All right. Draw your trend lines. Draw your channel. So on the monthly chart. Okay, there's one trend line we can draw at this point and this point. Okay. All right. And there's a support in this zone. Will it find a support or will it continue to go down? That is the question. As always, use a top-down trading method. There's a support here. All right. And so on, and so on. This is the end of this tutorial. Hope you have enjoyed and learned something from it to improve your complex Elliott wave analysis. I hope this video will help you to become a better complex Elliott wave trader. If you have any question or suggestion, put in the comment section, and in due course, I will be busy recording another video to answer your specific question. We are the GSTW24 traders talking about how to become a better complex Elliott wave trader. Step 1. Speak to you soon.